Well, with equities on record highs, the question is the trend still your friend? To talk us through some of the risks posed to equity markets at present, Jason McIntosh from Motion Trader joins us now live. Jason, great to have you on as always. Where should we start? Should we start with the local market and the All Ordinaries and have a look at the chart? Of course, we've got this backdrop of a lockdown at the moment here in Sydney, but what are we seeing in terms of momentum, in terms of that trend, and in terms of levels?
Yeah. Hi, Kara. Thanks for having me back on. It's look, I think the local market's a great place to start. Plenty of interesting things happening around the markets over the last few weeks. And so look, we've got this chart of the All Ordinaries here, and this has really been a terrific trend over the last nine months or so. It's been a nice, steady trend. There've been some modest pullbacks along the way. And you can see on the chart that all of those pullbacks have been really nicely contained by the 50 and 100-day moving averages. So I think that's a sign of a healthy, robust market. And another positive is it's not just the big stocks which have been driving the market. There's been plenty of activity amongst the smaller end of the market as well. So I know in the sort of signals I'm seeing over the last 9 months, lots of companies in the $100 to $300 million market cap category going, triggering signals and performing really well. So that's all been pretty good. So the big question now, as always, is, where to from here? So you can see on the chart, I've got a couple of green lines up the top, and that's really the last month. So for the last, say, 4 or 5 weeks, the All Ords has been pretty much trading sideways within this range. And I think probability favours that we're going to break to the top side of the range. It looks like a continuation pattern to me. The overall uptrend's in place. It's been interesting the last few days, though, that we've been pushing up against the top of that range, but every time we get there, some selling comes in and pushes it back. So I thought we might have been above it by now, but not. So look, we just got to keep an eye on it from here and see whether it gets through. I think it will. But look, that's pretty much the level to watch, kind of where we are at the current point. Now, I thought it might also be interesting to have a look at the S&P 500.
Yeah, how does that chart?
That's a good gauge to how the local market might perform as well.
Yeah, how does it compare?
So look, just looking at the S&P, it's it's a similar but an even better story than the local markets chart. The trend's been stronger. And while the local market's been trading sideways for the last month, the S&P 500 has been making a series of new highs. And we can also see those pullbacks have been contained by the 50 and 100-day moving averages. So look, that's all been travelling really well. And I've got a really interesting stat for you. I saw this during the week. So if we go back to 1928. This is the second fastest doubling of a market off a multi-year low since 1932. And there's only 2 times that's happened. It's back in 1932 and now that it's doubled within 400 trading sessions. So that's a pretty remarkable rally that we've had. So on the face of it, you'd say both the local and the US markets are looking, they're looking really good. Now, having said that, I want to take a step over to the dark side, and consider some of the risks or maybe some of the warning signs that could be out there. So while I'm bullish overall, like the trend's up, and while the trend's up, I'll stay long the market. I also always think it's always worth paying attention or being aware to alternative scenarios and possibilities.
Yeah, so maybe let's have a look at some of those risks then, specifically when it comes to the S&P 500. What are you thinking?
Yeah, well, look, it's really interesting how, I've got a really good chart which is worth looking at on the S&P 500. So this is what we're seeing here is if you look at the top of the chart, that's the S&P 500, and if you look at the green line, the orange line below, that's showing the stocks in the S&P 500 which are above their 50-day moving average. So what we've been seeing over the last couple of months is that the S&P 500 has been continuing to rally strongly, but the number of stocks above their 50-day moving average has been steadily falling. So what this says to me is that the overall leadership in the market, it's really becoming quite narrow of late, and that the gains we're getting, they're largely being driven by a small number of those mega cap stocks that have really been doing much of the heavy lifting. And what's also interesting is that last week when the S&P 500 closed at a new all-time high, less than 50% of the stocks within the index were above their 50-day moving average. And that's actually a really rare event. It's only happened 18 times since 1927. And another thing that's interesting is that 4 of those 18 occasions have been in the last month. So that's the highest cluster of readings at a single time since they began taking records of this back in 1927. And it's not just the S&P 500 doing this, it's also happening in the NASDAQ. So it hit a new high last week, another all-time high, but only 31% of the stocks in the NASDAQ were actually advancing on that day. So this lack of breadth we're seeing in the market, I think it is a concern. It's just not how a normal bull market would historically operate. So, look, that said, I don't think that's a reason on its own to sell, but I think it's definitely a reason to be a bit cautious, be aware of it, and look, perhaps it's a sign that we're nearing some sort of a mean reverting pullback over the next few months, and saying to be aware of and managing your portfolio.
All right, so you're not selling, Jason, but how are you positioning yourself when it comes to your portfolio?
Yeah, well, look, I think the play here is to trends up. That's the number one thing at the moment. It's like understanding the trend is up and respecting that trend, not trying to pick a top. So for me, it's all about sticking with the stocks in my portfolio which are rising, doing well. If I've got stocks in there which are showing some relative weakness, staying to falter, they're the ones I want to move on. I don't want to carry unnecessary risk through a period where there could be some sort of a mean reversion coming on. And look, I'm not running any margin, but if I were any margin or any leverage on my portfolio, I'd want to cut that back. And I'd also want to be selective at the stocks, like really selective at the stocks I got into at the moment. So I'm still buying. I bought some stock this week, but it's all about looking for the ones which really fit the criteria of what I'm after, about stocks with momentum, which have good asymmetric upside potential, and not chasing the wrong stocks or trying to buy stocks which are falling, because I think there is some risk out there which we've got to be aware of, but look, that risk can be managed.
And Jason, what else have you got in your portfolio? Are you a fan of the commodities market at the moment? I know gold is one that you're watching closely.
Yeah. Look, gold's always an interesting one. It's it's probably the one commodity which the most people follow, and you've got the perennial bulls who are always looking for the next big move up. And I think the price action over since that high last year, it's been frustrating for a lot of the bulls, but I think it's actually been really constructive. And I don't think this market is setting itself up for a big fall. On the contrary, I think it's probably setting itself up for quite a substantial rise, but it's probably going to take a bit more backing and filling before we get there. So look, we had last month, the Fed came out and said, look, they're thinking of raising rates a bit earlier, and that sent gold into a bit of a spin. We had that sharp sell-off there, and since then we've had a bit of a soft rally off the low. It hasn't been very inspiring. It's still below the 50-day moving average, so I think that's a sign there's some more churning and back-end filling to come. You can see the green lines on the chart. I think there's a good chance, I think there's a fair chance at least, we come back and test the lows from earlier this year. The key level to watch is that top green line. I think a break above there is the sign that this market's regathering momentum. It might take a little while for that to happen still. And this next chart, this is really interesting to put everything into perspective. It shows 20 years of gold. So on the left, we've got the big 10-year rally from the early 2000s. And halfway through there, you can see where I've got a blue box that says mid-trend consolidation. So just focusing on that first, you can see a big run up to that mid-trend consolidation high. The market got well above the 100-week moving average, and then it took, getting the perspective on these charts, it's like that's actually a 1-year period. It took a year of coming back in quite an aggressive sell-off and then trading sideways. A lot of people getting frustrated and moving on, but these things take time. Look at the box on the right. It's the same sort of setup, I think, where we've got this big mid-trend consolidation. It takes time. You've got to look at where gold's come from a few years ago to where it is now, and it's actually all nicely in proportion. Another, maybe, look, it could be 3, could be 6 months. We don't know, but a bit more time wouldn't look odd. So look, I think it's important for everyone to remember, not every situation calls for immediate action. I think we could see $2,500 gold in the future, but I don't think the setup to really move in aggressively is there at the moment. So sometimes sitting and waiting for that right moment is what's needed. So keep an eye on gold. A good trade for a bit later on.
Yeah, that 2,500 mark does seem like a long way off at the moment, but certainly one to watch. Jason, always love having you on The Trade. Thanks so much for joining us this afternoon.
Kara, thanks for having me on. It's been good to Skype in.